Hi, my name is Daniel Dal Molin. I'm a financial advisor here with Global Financial Consultants in Singapore. And today's topic, we're talking about the Common Reporting Standard. What is the Common Reporting Standard? The Common Reporting Standard is an automatic exchange of information between global tax authorities. It is an OECD initiative on the exchange of information about individuals and tax entities between global tax authorities. It first came into force in 2016, and there are now 115 countries that are signatories to this framework. What is the issue that you need to know about? The issue you need to know about is if you have assets, bank accounts, or investment accounts outside the country of your tax residency, then these will get caught up into this automatic exchange. For the benefit of this short video, we are only talking about personal assets, not assets inside companies or trusts. How might this affect you? If you work in Singapore and you open a bank account or investment account here, you invest your money, and one day you pack up and you go home or you go to another country, and that new country you go to is a signatory of the Common Reporting Standard. As you're no longer a resident or tax resident of Singapore and you become a tax resident of that country, maybe Australia or Germany or wherever, then the information about that account will be automatically exchanged with your new country of tax residency's tax authority. In Singapore, the tax authorities here are not really that interested in investments and earnings from investments overseas that you might have. But many countries, especially in the developed world, are very interested in what investments and shares, etc. you have overseas because they want their slice of the cake. So for example, I have an investment account here, $300,000 let's say, and I leave it here in Singapore and I return to Australia. What happens after that? Because I changed my tax residency and that investment account is outside my tax residency, that information is automatically exchanged back with the Australian tax authorities to say that I have an investment account and money's overseas. I meet many people in Singapore or in my travels as a financial advisor that their plan is to just leave an account somewhere and leave it for the future. I think today, after the introduction of the Common Reporting Standard from 2016 forward, this may not be a strategic option. As a licensed financial advisory, we do have legal options that we can leave and invest money offshore in different jurisdictions that may be able to avoid some of these complications. If you need to know anything or you'd like to have a chat about options that we have, please give me a call.